What's up, YouTube? Eric here, Mr. Fired Up Wealth, bringing a new stock to the channel today, dLocal. This is what I've been buying. The stock ticker is DLO. It's a smaller company. Maybe you haven't even heard about it. It's from South America. It was essentially a startup in 2016. The growth on this thing, guys, you're going to want to see it. It's absolutely incredible. You're going to want to check this stock out and put it on your radar. Stay tuned. So about dLocal, so it's from Uruguay. It's a fintech type company. Cross-border payments. I'll get more to it in a second. It was established in 2016 as a startup, and they do have offices all over, including San Francisco. Only 532 employees, so not a huge company, kind of in that startup mode, hyper growth mode, and definitely a stock that you want to have on your radar. This is from their S1. Now, this was an IPO earlier this year. They've had some earnings since then. Their mission is to enable global merchants to connect seamlessly with billions of emerging market users. That's really what this company is all about in a nutshell. So dLocal is focused on making the complex simple, and they're redefining the online payments experience really for those emerging markets. That is what they're focused on through one direct API, one technology platform, and one contract. They call it the one dLocal model. We enable global enterprise merchants to get paid, that's pay in, as well as make payments, so that's pay out. And they're a fully cloud-based platform, as you can see circled here, with the ability for cross-border and local to local in 29 countries. It's actually more than that now. We'll get to more of that in a second. Over 600 local payment methods. Let's dig into it more and see what it's all about. So what problems are they addressing? So multiple local payment methods with rising fragmentation. They really want to make it simple for those users. You think of emerging market users trying to connect those to the merchant in lots of different countries. We'll get to that here in a second. They also want to help with poor conversion, and they want to lower fraud. They want to help with complex and changing regulatory and tax frameworks. It can be very complicated when you're talking about cross-border payments, and they want to make that simple for the merchants so they can just do their job and connect to those customers. Before we go on, guys, subscribe to the channel. If these videos help, drop me a like, drop me a comment. If you haven't subscribed, do that now. Click the little bell to get notifications. I bring all kinds of stock ideas to you, not just growth stocks, also dividend growth investing. I talk about portfolio management, ETFs. Really, this whole channel is a lifestyle trying to help you with financial independence. So make you a better investor so that you can retire young and you can enjoy life. So definitely subscribe. Okay, so this really paints the picture of what dLocal is all about. On the far right, guys, you've got emerging market user. On the far left, you have global merchants. They're really trying to connect those two. And in the middle, you got that local payments provider. Okay, so you got front end. So the dLocal front end, that's things like refunds, automated reminders, subscriptions, installments, mobile ready so you can use your phone, checkout, smart fields, right? And then connecting that on the back end with things like regulation, compliance, tax collection. You even look at like Patreon. I use Patreon. I've got 35 plus countries represented. And Patreon collects those taxes and those VAT taxes for me and pays those countries so I don't have to worry about it. dLocal helps the merchants with that as well. Also help with fraud, security, smart routing, settlement, merchant dashboard to make everything simple so you have analytics, reporting, and then dispute management. So here are some vectors of future growth. This is from one of the company presentations. They talk about 4 different areas. Commercial efforts, the growth on this, 185% NRR, pretty impressive growth, and they're continuing to work on that. So also inorganic initiatives. We continue to look at alternatives to enhance commercial efforts, as well as they want to expand that geographical footprint to different countries. So good segue. Geography. They want to enhance the presence in the countries they're already in. They also want to expand into new countries. In fact, Thailand and El Salvador in Q3, that's 6+ markets now in 2021. So they're continuing to expand not only in the countries they're already in, but also into new countries as well. Products, they want to enhance that portfolio. So they want to make the products they have better, and they also want to develop new solutions and add more products so they can get even more footprint from each customer that they're working with. Enhanced pay-in and payout capabilities. So dLocal, valuation. What you want to know is the stock a buy now? Now, I've bought some of this, but you need to understand what I mean when I say that, because I dollar cost average. And I'll explain at the end of the video what exactly I'm doing with this stock. This has about a $9.5 billion market cap at the time of this video when I was recording it. In late October, it had 85 times revenue. Now it's about a 55 times revenue. It's sold off though, so after the last earnings in October, late October, it sold off from $50 to $30. And that's a 40% drop. The high on this stock, again, this was a new IPO in 2021. The high was $73.43. And at $30, it sold down to like $29 and change. It was off about 60% from the highs. It's trading now closer to $35, somewhere in there. Now their lockup expiration period actually expired at the end of November, so November 30th. So that's something to keep in mind. And this thing is still expensive, but let's look at some of the catalysts, some positives, then we'll look at some negatives, and then I'm actually gonna show you a chart and look at the stock and see where I think the stock price might go. So when we're talking about the positives here, massive total addressable market. In fact, in the Q2 earnings presentation, DLO estimated its total payment volume. So their total payment volume, TAM, total addressable market, at $1.2 trillion, which is absolutely huge, right? Tremendous opportunity. Their revenues, they took basically from $0 as a startup in 2016. And in 5 years, they grew that from nothing to $200 million in revenue. And stay tuned, because it's not just revenue at any cost. They're actually growing pretty healthy with some margins in there as well. 157% year-over-year revenue growth in the first half of 2021. Now, they are having a little bit of a slowdown. Their estimated growth year over year for Q3 is 120%. Now, we've seen this on a lot of these stocks that benefited through the pandemic and that are high valuation type stocks that have seen some compression with their revenue growth, harder comps, things like that. So not surprising there. Now, here's a rarity for these hyper growth stocks. This thing is profitable. That's right. It has a P ratio. Now, it's a very expensive P ratio at 175, and that's based on $34.19 a share. So at $34.19 a share, the P ratio is roughly 175, to give you an idea of what this is worth. I don't think you necessarily use a P ratio to measure, to value a company like this, but it is important to note that they do have some profits, which is rare for a stock that's growing at 120% clip. Margin expansion, so the EBITDA margins actually have been positively growing from 40% to about 44% over 6 months. So that's a positive as well. So if I look at the financial performance, this is the last earnings here, you can see 122% year-over-year revenue growth, very healthy. Net profit margin, 28.64%. 122 plus 28, I mean, you're rocking like 150 on the rule of 40. Anything over 40 is considered, pretty good. This thing's like 150. So it's very impressive. Let's talk about some of the possible risks. So risks, valuation, still kind of expensive, but it's come back. And I think it's a lot more attractive here, of course, than it was before, which is why I nibbled a little bit, and I'll talk about that in a second. Now, their take rates have recently slipped a bit. They were about 5%, and they've come down. The estimated range for the next couple quarters is about 3.8%. Now, the reason for that is they're doing a lot more volume with their larger customers, and those customers benefit from tiered pricing. So they get breaks as they do more volume. Now, 92%, this is a risk, of TPV in 2020 came from merchants with more than $6 million in annual volume. So they might be a little bit top heavy with some of their biggest customers, and some of those customer names in there, like DD, have some risks of their own as well. So just something to note as an investor. Commoditization and margin compression could be possible down the road. You think of some of these stocks where they get in early and they can grow. As competition comes in the market, it can become more commoditized and can lower the prices and have margin compression, which will whack the stock. So something to think about maybe down the road. So next, guys, I'm going to look at a chart, give you a little bit of technical analysis, and then tell you what I've been doing with the stock and what I'm going to do next with DLO. Okay, so you can see DLO was actually an IPO, opened on June 4th, Friday, about $34.52. It traded down to about $31. You can see that little dip, and then it ran all the way up, and it's come full circle. So after half of a year, we're basically at the same prices. So let's look at a chart and see where it might go. So you can see the high was 73.43, and it just kind of downward trend channel. You can see this channel just downward trending. Now where we're at now, we did back at 11.16. So I said it could go to 30 to 35 after earnings. It was falling pretty hard, kind of retesting those IPO levels. Now, right now, pre-market, you can see it's trading at $33.46. And you can see that 29.60 right here is about where it bottomed. Now, I think it could bottom around $30, but I think it's very possible it could come down as low as $25 when you look at the chart and just the possibilities. So this range right here, I have this circle here down to 29.60. I think that's an opportunity to nibble the stock, knowing that I think it could come down as low as this S2 closer to $25, maybe even $23. It doesn't have to happen. It's just a possibility. So I actually bought kind of a starter position in this circle here, this $30 to $35 range. So I've got about a fourth of a position, maybe a fifth of a position. And if it goes a little lower, I'll add, and I might even add more in this range, but I'm being patient. We've got a lot of volatility with the inflation data and things like that. So I do own this stock. It's on my watch list to add more. I do like it in these levels. It can go a little bit lower, but this just gives you a high level overview of what dLocal is all about. If it's helpful, make sure to subscribe to the channel. Click that bell to get notifications. Drop me a like, drop me a comment. Have a great rest of your day. Take care.